All right, what's up, guys? Welcome, everyone. That's the wrong one. Let's see. All right, what's up? So I have a new standing desk, which means I can run around in my office. I can wave my arms and do all of this fun stuff while being live, which I love. I just want to, awesome. And I have two cameras. Check that out. What's up, guys? It's pretty cool. Check it out. So now you can see my new awesome standing desk and be like, whoa, I want one of those. All right, so today we have a lot to talk about. We obviously we're going to go through the markets. We're going to be looking at three main things that are affecting the global markets today, and of course we're going to be talking about FTX as well, and we're going to be focusing on the technical aspect of how, we're going to be looking at Bitcoin and Ethereum mainly to see which levels we want to see get reclaimed, to see strength in the market. And we're going to talk about the fact that is FTX, does the collapse of FTX have the power to really hurt the crypto economy, even in a scenario where we might have peak inflation and we might have that risk on sentiment coming in, right? And we have three main things that is, I believe, currently affecting the risk sentiment, which is, one is inflation, two is the China situation, with China potentially opening up and rethinking the whole idea with the zero COVID policy, and then of course the situation in Ukraine, and specifically the missiles over Poland. As we're going to be discussing that, and we're going to be of course looking at the charts to see if we can find any interesting trades that might align with this. So let's start by looking at the Bitcoin chart right here, and it's thanks, man. Thank you. I love this setup as well. Thanks for being here live. Let me know, guys, if you have any questions. And of course, before we go into the actual analysis right here, I would like to give a huge thank you to PrimeXBT for helping me out and sponsoring this channel right here. So PrimeXBT is actually the only exchange where I have any crypto right now, and that is in form of USDT stablecoin on the exchange. All of the other crypto that I have, which is basically mostly only Bitcoin and Ethereum, is on in cold storage on a hardware wallet, as it should be. If you want to sign up PrimeXBT and trade the legacy markets and the crypto market, there's a link in the description below, and you can also use the code LIBS42 to get up to a 7K deposit bonus. Now, if you create a new account and you want to get a better discount code, you can DM me on Twitter and I can help you out with that. Now, in the light of FTX and everything, even though I am using PrimeXBT and I do trust them, it's still a crypto exchange and it's still an exchange, right? So you always have to, no matter which exchange you're using, even if you're using an exchange that you really trust, and honestly, I believe that most people did trust FTX, right? It's a lot of people. Like, FTX was probably the most trusted exchange out there. Had celebrity sponsored, not like that's a good thing and a good indication of an exchange being sponsored. My point here is, lots of big players, lots of reputable people in the industry had a lot of money on FTX. Almost everyone I know had money on FTX. The reason why I did not have any money, maybe I had like, I don't know, $50 or something like that on FTX. I don't know. I haven't even logged in. I don't care. It's gone, But the only reason I didn't have money on there is because I started trading on PrimeXBT and I only had spot holdings on FTX. So I figured, why am I going to hold? And I transferred this out like 3-4 months ago. So I thought, why should I have the spot holdings on exchange? I'm not even trading there. So I withdrew all my funds to my ledger and I focused on PrimeXBT, where I had the funds, right? But that was like, it could have been me as well being hurt in this situation right here. So my point is, even if you trust the exchange you're on, it's still crypto. So you still have to have a sense of risk management in managing your funds and with the fact that you're in crypto and you have it on the crypto exchange, that should be taken into consideration when managing your risk. So a great way to manage that risk is the use of leverage, right? So just a very simple example that might help you guys, right? If you have $100,000 in your trading account, and that is what you're actively trading with, you have $100,000, you're actively trading with those funds. Now, if you would have that on a legacy broker, just to know that that shit happens in that world as well. I don't know if you guys remember. I don't remember that because I was trading at that time, but I believe it was the Euro CHF pair, which the Swiss bank came out and said something about removing the peg unexpectedly, and just absolutely crashed the price, and a lot of legacy brokers actually went down with that, and a lot of people lost a lot of money. So it happens, but very not a lot, not very normal. But your money on a regulated exchange, you're secured in a whole nother way, right? So your risk management is like, this is way different. If a crypto exchange goes down with your money, that money is most likely gone, probably gone. You're never gonna get that back, right? So you have to take that into consideration when moving your funds into a crypto exchange. And the use of leverage, right? So you have 100K to trade with. If you put 10K, 10% out of your portfolio on an exchange, and you trade using 10x leverage, obviously you're trading with the same amount of money, but you don't have all the money on the exchange. This is a very simple way of putting it. Obviously, it's not that simple in reality, but just to know how you can use leverage as a risk management tool, right? And that's how I got it set up in PrimeXBT as well. I don't have all my money in PrimeXBT, obviously, because anything can happen in the world of crypto. I don't think it's going to happen, but anything can happen. And we always have to take this into consideration. Yeah, now I have to have, no, not really. Not really. You have no idea if I'm wearing pants or not. I am though. Maybe not. So, as you can see right here at the top, the RLZ Trading Room is live. I've just sent out some updates in the market update channels. If you're a member of the RLZ Trading Room community, check out this post right here where I kind of broke down the inflation story, the China story, and the Ukraine. And also on top of that, I had a 15-minute long video market update to update you guys on the technicals of the market. And basically what we're trying to do here is we're trying to find technical themes, technical setups that kind of aligns with the macro movers right now. And I think right now the main story is what's going on with what's going on in Ukraine, right? So what's going on in Ukraine, and was the missiles that killed 2 people in Poland, was that from Russia? Was it an attack from Russia, or was it a mistake? Was it a Ukrainian missile that was used to shoot down Russian missiles, or was it the other way around? Now, I've seen Ukraine officials coming out. All right, so you can see right here, I'm watching Bloomberg, and it says right here that Biden told allies Polish blast caused by Ukrainian air defense. And that's what I've picked up as well throughout the this morning. So I saw an interview with a Ukraine ambassador saying that the missiles were from Russia and that everything else is conspiracy theories. And at the same time, we saw news coming out of Poland saying that it actually was a Ukrainian missile. And now Biden is saying that it was a Ukrainian air defense mistake. Basically, they're trying to shoot down. It's not perfect. Like, an air defense, obviously, is not 100% perfect. These things happen, and the town was right on the border of Ukraine. So we could say that at least everything is now pointing towards the fact that this was a mistake, and should probably not be cause for concern. I know what you mean about this. I don't think Zelensky was calling that idea as conspiracy theory, but some official. Zelensky went out and said it was Russia. But listen, he wants NATO to join the war. He wants help from everyone else to win this war. So I guess, if that's his plan to bring the rest of the world into the war against Russia, obviously he would say that the missile war from Russia, and now let's bomb Russia, right? But that was not the case. That was obviously not the case, which is a good thing because we don't want nuclear war. Like we don't like the it's a rather important thing for the world not to have an escalation of this conflict. So let's hope that it doesn't get much it gets much worse than it is. I mean, it's a human tragedy as is, and I really do hope that this comes to the best possible end soon, which I don't think it will. Unfortunately, it doesn't really look like it, and the market is obviously reacting quite heavily to whatever's going on in Ukraine. So we can look at an example, right? So the dollar currency index. By the way, guys, we will have a trade that we're watching inside the trading rooms. I kind of have to. Oh, God damn it, we had that 4-hour close right there. So we had a trade just confirming here on along on GBP versus USD. And the idea here is that the GBP might be strengthening because the inflation in the UK came out this morning. The inflation numbers came out at 11.1%, and the expected was 10.7, so higher than expected, which means that inflation in the UK going up, which puts pressure on the Bank of England to raise hikes. The inflation in the US actually showed a possible peak inflation, which put some pressure on the Fed to actually not raise hikes as much, which obviously creates weakness in the US and strength in the GBP, because obviously increasing interest rates for GBP, good for the currency of the UK. Now, lowering interest rates for the USD, good for the currency of America, the US. So this kind of aligns with the current situation, and also because of the fact that the missiles were not from Russia, most likely adds to the risk-on sentiment, and that would obviously be negative for the strength of the dollar. As you can see right here on the dollar currency index, we are about to potentially break down here and move even lower, and this is a massive drop, which should be good for risk assets. We're going to go into Bitcoin and talk about this soon as well, and it all ties down. It's all the same thing. This is an idea of, we're looking at, are we in a risk on scenario, or are we in a risk off scenario? And right now it kind of seems like risk on. So the idea here was to enter on that 4-hour candle close right there. You also see on the 1 hour that we have on the 1 hour we kind of confirm the bounce right here. I mean, on the 4 hour we confirmed the bounce right here. And then on the 1 hour, we saw price kind of, breaking above, and this big wick right here. It kind of feels like this trade is gone. It feels like this just moved a little bit too quick. But let me kind of break down. Like, the idea here would be to enter on that close right there, and this would be a rather profitable trade. So it sucks that we were too late on this one. Can we enter at market? No, absolutely not. The risk to reward would be terrible doing that. So either we'll have to accept the fact that this is just a trade, a missed trade, and the reason for me missing this trade was, preparing for the live stream, starting the live stream, and doing the whole introduction and talk about Ukraine. And at that time, while I was doing that, we also saw that the news came out that Biden said that it's most likely not a Russian missile. It's most likely a Ukrainian air defense mistake. And that most likely caused this move, with combination of the news that we had from the UK, with inflation being higher than expected. And it all moves very quickly, right? Stuff moves very quickly. When these types of events are going on, which highly affects the market, it moves rather quickly. So you have to be prepared, and you have to execute as soon as you have that confirmation. And the confirmation was on that 4-hour candle right there. And you can see right here, as soon as that 4-hour candle closed, we started moving higher. Would you enter if it moves down in coming hours? Yes, I would. But I would only do that if this current entry area aligns with the 1 hour and the 1 hour fib. So this is the move we want to fib, right? So if that's the low of that move, we bring that fib up. And even if we maybe come up and test this level right here, we could very well see something like this, and we would enter on somewhere around that area right here. So let's monitor this. This is an idea that we're definitely going to keep on monitoring as a main idea of the day. So I'm moving that up into the list right here. We managed to get out of GBP CHF right here, and we now have a looks like a bullish break in market structure. We had the stop loss right here, so we exit that one. So glad we got out of that one. Right now we have no open trades, and no open trades at this time. We got stopped out of the FTSE 100 right here, which was a at least I'm glad we got stopped on that red line and not the original stop loss we made. We only lost 0.3 R on that one, while making 2 R profit on the GBP CHF short, which turned out quite well. Now we're looking at to reverse our position on GBP, but instead of shorting, instead of going long on this one, we're looking to go long on GBP versus USD, which seems to be the much safer move right here. So we are in a risk on scenario. Obviously, we can also look at the Euro 50 right here. This I wanted to see a move down here, but it might actually look like we're getting that bounce on the 50 instead of the weekly open on the 618. So we might want to enter a trade on this one as well, because it actually looks quite decent. Now, I know we have something going on in terms of news event for what when was that? Today we had the ECB. All right, so today we had ECB financial stability review 1 hour ago. What we have coming up today is in 3 hours, we have the inflation rate for Canada. We have retail sales for USD coming up in 3 hours. So I think we can still take the trade on GBP USD, and maybe the retail sales might actually be a catalyst for the GBP USD trade to perhaps come lower down to entry. That would be the best case scenario. So the trade idea for GBP USD would be, I believe, we're looking at something like that. A 3R trade, definitely worth taking. I'm really liking that idea right there. So that's something we're going to be watching throughout the day. Euro 50. Had a decent long signal right here, but I wanted to take this trade based on the 1 hour, right? And we kind of need to see price move higher, because this is I'm trying to predict where the high might be, or not predict, but what I'm trying to do here is saying, like, if the high is up here, we have a good chance of getting an entry here on a retrace. So that's basically what we're looking at here. On the Nike, nothing very interesting right here. Nothing very interesting right here. We have to I don't know, like no super clear market structure right here. But GBP definitely one of the most interesting ones right here. It's a shame that we missed out on that move right there. So let's go through the legacy markets here to see if we can have like what the pattern is. And obviously we're definitely seeing some risk on moves right here. We looked at Euro CAD yesterday as well, and it had a very nice bounce on the 4 hour 20 EMA in the weekly open. That was a possible entry, but we obviously missed out on that one as well. We definitely want to trade the risk on narrative right here. Silver is looking quite interesting. Now, if you do have any charts you want me to look at or any questions, let me know. Let me know if you want me to look at anything, if you have any questions. Thank you, man. I really do appreciate that. I really do appreciate all of you, especially the long-term followers and all the new people coming in here. I do really appreciate you guys coming in here and watching live and with all your questions and all of that, and especially these, the feedback and the positive comments. That's really That's the reason why I'm doing this, right? I really want to try to help as many people as possible here. And one thing I always try to repeat is, like, you gotta stay patient, right? You really have to be, as a trader, you really need to stay patient, right? My trading really improved significantly when I just started taking it easy and I didn't hunt for setups. And this is an ever evolving process. And today my trading is it's very simple, very straightforward, very easy to understand, and just the approach is just everything's just automatic, right? It feels like it's automatic, right? But really what it is I've throughout the years I've built up and created, positive habits and routines around my trading life, which have basically now become automatic, right? But in the beginning it was very complicated to learn TA. It was very complicated to learn TA. My system was very, very complicated. All the indicators, like everything was very complicated. But I slowly but surely started stripping it down. And when I had a technical system in place, which made sense, I started focusing on the mental aspect of trading. And one thing that has really helped me when it comes to the mental aspect of trading is the book called Trading in the Zone by Mark Douglas. It's actually available on Spotify. So if you search for Trading in the Zone on Spotify, you'll find it. So let me see if I can find it. Yeah, so never mind. I'm not gonna look for it. Just go to Spotify, search for Trading in the Zone, and it's there. It's completely free. You need to read that book, right? And you need to read it. You need to listen to it quite a lot. You need to understand the things that he talks about, especially the fundamental, like the fundamental pillars, like the fundamental mental pillars of trading, because it's really all about how you approach the markets from a mental point of view. Your technical system is not that important. It's not that important. Like, what's way more important than TA is trading psychology. And I know that there's a lot of big traders out there. There's a lot of influencers saying like, oh, there's actually quite a lot of people saying that trading psychology is not important. All you have to do is just follow the plan and look at the statistics and just follow the statistics and follow the plan of your system. But like, that's the thing, right? That's the problem. Give me a second. So that's the problem, right? Not a lot of it, like not every one of us is having a easy time to follow a plan. Like, I'm not a very structured person personally. So following plans and making plans and doing everything in a structured way is actually super hard for me, right? Honestly. And I know a lot of people are like this, right? We were all over the place, right? Especially in today's society where everything's just supposed to be fast and information flow is just extremely fast, and you get stressed, right? And it's really the psychology of trading is so important. Now, if you have a very easy time of following plans and you have a very easy time of being structured and organized, well, maybe the psychology aspect of trading is easy for you, and it's so easy that you might say that it's not even needed or necessary. But it's probably because you've grown up. Maybe you've been raised in a certain way and you've grown up, and you throughout the years you've learned the routines and habits and the mindset needed to have an organized, structured, and be able to plan easily. So for you, trading psychology might come easy, but for most people, and I probably mean not 90% of people out there, you're gonna make mistakes. You're gonna make mistakes, which is just totally retarded, right? So you backtest your system. Let's say you backtest your system and you have very clear statistics of what that backtesting shows you, right? So you know that when price does this, I'm gonna do this. But then when it comes to the actual execution of the trade and price does what you're waiting for the price to do, you do something completely different. You do something completely different. And you're like, why the fuck did I do that? Why am I this stupid? You're going to sit down and you're going to talk to yourself and you're going to be like, why do I keep making these stupid mistakes? I know that a lot of you watching this are the same, and I am too. Not as much as before, but we all know this. But the technical system is all about testing, 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 getting the statistics and back testing and seeing what works. Now you know what works, and the plan is just to follow the system. And then you have risk management, right? Which is you know, the technical aspect of trading, the least important thing. And then comes risk management, which is the second most important thing. You can have a great trading system, but you will never be profitable with bad risk management. And the same thing goes with having a good risk management system. You can be profitable with good risk management and a bad system. But one thing you will never be profitable with is bad trading psychology, right? If you don't have the right mental approach, you will never ever be profitable. So let me kind of go through the history of that, the history of that, mental evolution, right? So I remember I started trading and it was very, very tough, very hard to understand the technicals of everything. But then I understood the fundamental basics of and the fundamental truth of the market, which is basically markets tend to trend. A trending market is most likely going to continue to trend, and that trend will end when there's a break in market structure, basically. And when you have a trending market, usually previous horizontal levels tends to get retested, and that's very simple, right? And then I created a system around that, right? So when I had a system, I noticed that even if the system showed great results in back testing, in live trading it was way different than back testing. So I started thinking about that, right? Why is the back testing results so much better than the live trading? It should be the same, but obviously it's not, because you look at the trading journal, and this is something I figured out quite quickly when I started having a trading journal. By the way, if you don't have a trading journal, you get one right now. You close down this live, don't close down the live stream. You hit like first, and then you close it down, and then you create a trading journal. So going through my trading journal, I saw that the mistakes I did when I had a losing trade that was not part of the plan, I had notes like I was stressed, haven't slept well, I had a fight with my partner, whatever, could be whatever, right? Something that affected my mental state of mind and my mental well-being negatively. That's when I started losing money. So I started thinking about that, and it became so frustrating because it was so hard to stop making these mistakes. But I figured out that it was such a big part of me. Like, I was an impulsive person, not very disciplined and not very patient, and I didn't wait for the right setup. So what I had to do is I had to restructure my whole mind. And to restructure my whole mind, I had to restructure my whole life, the way of living, and my day-to-day routine. So I put in, a new routine of meditating 10 minutes every day, which obviously created a sense of mental balance, right? So that's a routine that was going to help me with discipline and patience. And I put in routines around the 4-hour candle close, right? So I was only going to take trades based on confirmation around the 4-hour candle close. That also created that forced me to be patient, that forced me to have discipline, and forced me to be patient and actually wait. So if I saw a trade that was potentially setting up, but the candle was closing in 3 hours, and I followed the plan, I knew that as long as I followed this plan, and if I create a routine around waiting for the 4-hour candle close, I don't have to try to be disciplined. I don't have to try to be patient, because I will automatically be disciplined and patient if I just wait for the 4-hour candle. And when that is a routine, it just happens automatically. So I started adding small things. And by the way, that's from the book Atomic Habits by James Clear. That is a golden book, right? You have to check that out. It's a great an audiobook as well. Uh, he's done that audiobook himself, so it's really, really good. And he talks about how you create positive habits in your life, and that has helped me a lot. So the combination of the Trading in the Zone book with the Atomic Habits really creates the perfect mix for a trader. And I haven't read any technical analysis books, right? It's like people ask me a lot, can you recommend any trading books, right? And they usually want to see or hear books that will give them a trading system, that will show them how we're supposed to be doing technical analysis and basically give them a system. But it's not about that. It's about creating the right mental state of mind and creating positive routines and habits in your life that does that automatically. Now, learning TA and the technical side of things, that's trial and error. That's testing, back testing, forward testing, gathering statistics, and a lot of trial and error. That will take you to a profitable trading system, even with very entry-level knowledge of technical analysis. The system I have, not very complicated. All right, so that's 20 minutes of me talking about that. Let's continue with the market scanner right here. But guys, like, please trust me when I say this. You focus on the mental state of mind, and don't be too frustrated when you start losing money and you start making mistakes. Everyone does that. Everyone does that in the beginning. You just have to learn from them. As long as you learn from those mistakes, it's not really mistakes anymore. So looking at silver right here, we have a pretty decent trend right here, and we have a pretty decent bounce here inside the reload zone here, and we have reclaim the 20 EMA here on the 4-hour. It looks pretty good, right? And what I'm thinking now is perhaps for silver, we want to look at a possible entry down here on the possible retest of the 4-hour 20 EMA, and we can actually have a pretty decent stop loss on that one as well. So we're going to move that up. This is one of the most interesting ones right now. You can see right here that you have a pretty clear level right here, and I would love to see a retest of that level. You can also see that you have the weekly open here, you have the 618 and the 4-hour 20 EMA, and it's this general area right here where we want to look at a possible entry. What I like to do is I also like to put the fibs on the low time frame move to see if there's any confluence with the high time frame level and the low time frame level, and I do think that this is some great confluence right here. So that's something we're going to be watching on silver. So I have an alert right here, and if you're a member of the RLZ Trading community, you will have, as soon as I get the alerts right here, I will alert everyone in the community, and I will send if there's a setup, I will obviously send the setup out there. If you're already not a member of the RLZ Trading community, you can check out the link in the description of this video. It takes you to a form, and that form gives you, it's an early bird deal. Normally you would have it on the website, right? But we're currently working on the website. We've decided that we're going to be not launching the website just yet because we want to have the members area all set up. So the idea is you get the subscription to the RLZ Trading Room, and with that subscription you get an entry into the members area page as well. And in that members area page you will have videos explaining parts of the system, how the Discord server works, and which indicators you need to trade my system, and all of that, right? It's going to be right inside the members area. Right now we have it in the Discord, and it's not really that good, not really that organized, honestly. So right now we have an early bird deal. Check out the form and the link in the description if you want to get in on that. So silver, GBP USD, silver currently two of the most interesting ones. Euro 50, not really sure about that one. Let's go through this quickly before we take a look at the crypto markets. And a quick reminder to like the video. It really does help me. A small gesture helps me more than you would imagine. So if you can like the video, if you like what you're seeing, please hit that like, and I would be very, very happy for that. All right, so we obviously have some strong moves. We have some really strong local trending markets right here, but no clear, not no very clear setups just now. Bitcoin and Ethereum is moving lower, while a lot of other currencies in the a lot of other, well, risk on assets is moving higher. Euro USD also bounced very nicely here on the weekly open. This is a possible trade as well. I'm moving this up right on the GBP USD because this is a possible trade right here. All right, before I wrap this up, let's take a look at the crypto market as well on Bitcoin to see what's happening on Bitcoin. What are we looking for in terms of strength, and where are we going to short? We're not going to long this, but I'm not going to short this as well. But maybe we can look at some scenarios where that might be, where that might actually be possible to do so. All right. What's interesting here is when I mentioned liking the video, the view count on the live went out significantly right when I said that, and that's because, you know, you liking the video tells the YouTube algorithm that people like this, and it will recommend it to rest of YouTube. So it really helps to grow the channel, get more people in here, and, you know, the bigger the channel gets, the better it gets, and the more educational content I can have for you guys. And as you can see, right, I try to really do my best on these live streams to not like, I try to give you the reality of trading, right? The reality of trading and the reality of price action. I try to keep it as simple as possible. I give you guys what I think you need to start a profitable trading journey. My strategy, thank you, man. Thank you. Check this out. This is awesome. Oh, fuck. I got the goddamn share under. Holy shit. I almost broke everything. God fucking damn it. I'm sorry for yelling, but look at this. I got the share under the desk and I almost broke everything. That's the second time I do that. Whoa, that was weird and sweaty and dangerous. Holy shit. Everything almost broke and like fell apart and fell over me. Like, these screens are way too expensive to do stupid mistakes like that. Holy hell. All right, so let's ignore that and let's not make any memes out of that clip. Let's talk about this one. So my strategy is clearly profitable on paper. 2,000 trades. 2,000 trades. That's crazy. Been in a demo for a month now. I often find myself paralyzed to enter a trade. But you're on demo. Like, come on, man. You're on demo. Like, you have nothing to lose. So, like, if you're in a demo account and you're paralyzed of taking a trade because of fear, you're not risking. Like, you got to think about the risk. You know, what's the actual risk of the trade? What are you actually risking? So what are you actually risking? Because you're not risking any money because you're on a demo account. You're not going to lose money. So what are you risking? Well, you're most likely afraid of having a losing trade, because that will hurt your confidence and that will tell you that, basically send you signals that you're never going to be profitable. You're losing money. You're not profitable. Your system sucks. You're never going to make it. You're a terrible trader. Like, that's, I mean, we have those thoughts when developing a system and starting trading. But you got to understand that when you're demo trading and you're forward testing, right? Because that's basically what you're doing right now. You've back tested 2,000 trades. So don't do any more back testing, right? 2,000 trades, way more than maybe you want to do, right? So you know it's profitable. You also say right here it's clearly profitable on paper, right? So it's profitable. You've done 2,000 trades and it's profitable. Now what you're doing on demo is you're forward testing, right? So you're making sure that the same data, same historic data, is also true for future price action. So you have to take the trades exactly like you're back testing, right? So that's why you're trading on demo. That's the only reason you're trading in demo, because there shouldn't be any feelings and emotions in demo trading, right? So really get that, like really try to understand this, that the reason why you're demo trading is to forward test. And you need to get rid of the emotions, because there shouldn't be any emotions, because you're not losing anything. It doesn't matter. It does not matter what you do on a demo account, right? The only reason why you're trading demo is just to make sure that it works forward in time as well. But for that to be possible, and for you to have the right statistics and do it in the right way, you have to forward test and demo trade exactly like you're demo trading. If you can't do that in demo, you have to forward test exactly like you did in back testing. If you can't do that on demo, you're never going to be able to be a profitable trader. So that's your first step. That's your first step. When you feel like you're demo trading just like you were back testing, that's when it's time to go live. So first, you need to demo trade for a couple of months to see that you're profitable. And I would say that if you're profitable for 2 months straight, if you feel like you're forward testing just like you're back testing and everything works well, and you've been profitable for 2 months straight, that's when you move on to live. And that is when you will start losing money, because that's when the real fear of losing money gets in. But in demo trading phase, the only reason why you're demo trading is because you just want to make sure that the back testing data works the same in current price action and market structure. So demo trading and back testing is pretty much the same thing, right? But if you're having problems with, if you're having emotional problems when demo trading, you really have emotional problems, right? And you really need to work on that. Like you need to make that your main priority in trading, to really, really, really work on that. So, all right. So how do we work on that? What's the solution here? How do we work on that, on these emotional problems? Because they are emotional problems, right? Well, you have to, like I've said so many times in the past, you have to create routines and habits in your life that helps you not having to be as disciplined in trading. So discipline, discipline is we have a certain percentage of discipline throughout the day. And if you use 100% of, you can't be disciplined all the time, every day. Not possible. It's like a power reserve we have. So let's say you have 100% of discipline. If you use up that 100% discipline in the first hour of the day, and then you continue trading, you're going to have a very hard time trading rest of the day. Now, what you have to do is you have to set up routines and habits in your life, so you don't have to use as much of that daily available discipline, right? Because if you don't have any structure, if you don't have any positive habits and routines in your life that is positive to and gives your trading structure automatically, you have to be really focused, and you have to use that power of discipline to make sure that you follow the plan, right? But if you trade too much, right? So let's say you over trade, which you probably do. That's one of the, well, you say you're paralyzed, but most people over trade. That's one of the biggest problems. You over trade. So what do you do to make sure that you don't overtrade? Well, you create rules that makes it impossible for you to overtrade, right? So what I did was 2 trades a day, right? No more than 2 trades a day. If I take 2 trades a day, and I never take more than 2 trades a day, it's impossible for me to be overtrading. Now, of course, you're going to be taking more trades. You're going to be taking more trades, but that's only in the beginning. But you need to create a routine. It takes anywhere between 60 days and 90 days of repetitive actions for it to become a routine, right? So let that sink in. It takes more than 2 months of repetitive action for something to become a habit, right? So expect to make mistakes while trying to set that up. So if you're over trading, if you're a swing trader and you're over trading, make a rule that says I'm only going to take 1 trade a day, only 1 trade a day, right? I had these rules. I said only two trades a day, and now it's a now I don't have that rule anymore. But I've created, because of the rules that I had, I've now created the habit to take less trades. And by taking less trades, I made it a habit, and it's now automatic of me to change my whole mental structure when I'm looking at the markets. I'm not looking at the markets with the perspective of taking a trade. I'm looking at the markets with a perspective of the market giving me a trade whenever the market is ready to do so. So let's say you have a problem with being paralyzed before entering a trade. Like you get the entry confirmation, and you have that entry confirmation, and you feel fear of entering the trade because of some reasons, because you're risking more than money, because you're on demo trans, you're not even risking money. What you have to do is, I would highly recommend that you, before your trading session, meditate for 10 minutes and think about this, right? Think about what you're risking. What are you afraid of in trading? And tell yourself, you can say it out loud or whatever, and just tell yourself that every new trade has a completely random outcome. Every new trade has nothing to do with the previous trade. The fear I feel from the previous trade is totally irrelevant to the new trade. And also tell yourself that I'm not risking anything. I'm not risking anything, right? Because I'm on a demo account. If I lose a trade, it's a good thing. If I lose a trade, it's a good thing, because I can then look at that loser and try to gather information and make that loss into a learning experience. So the more you lose, the more you're going to learn, and the more you're going to learn, the better trader you're going to become. So the more you lose, the better you become. So losing is good. You embrace the losses. You want to lose because that's a learning experience. And when you're demo trading, you can embrace all the losses, and the more you lose, the better, right? So you have to shift your mindset and perspective. You like losing. Losing trade is good. Seeing red numbers and seeing a minus P&L, that's a good thing, because inside of that minus P&L is a huge learning experience that you're going to be very thankful for when you start live trading. So really think about your emotions, identify your emotions, and when meditating before the trading session, you say that everything's okay. I don't care about losing. Losing is actually a good thing. I embrace the losses, and visualize yourself losing, and and while being calm. You see yourself losing, and you're absolutely calm. You're meditating. You're seeing your P&L go down. You're seeing you're in a losing streak, and you're being calm while you're thinking about that. You're visualizing yourself losing while being calm, and you're telling yourself that losing is good, because you really need to get that you really need to get that perspective of not being afraid of losing. And I mean, truth is, when you start trading, you're probably going to be losing more than you're winning. So it's just better to accept the fact that you are a loser in terms of win rate. But when it comes to, because I mean, let's say you start live trading and have a 40% win rate, which means you're going to be losing 60% of the time. You're going to be losing more than winning, but the winners are going to be bigger, so you're going to be making money, right? But you're technically speaking, you're a loser, right? Just accept that. Now, that's what I believe is one of the hardest things in trading, and it's also one of the reasons why I believe this is why I believe most people suck at trading, because as kids we're grown up to as kids we're grown up and thank you, man. I really do appreciate that. I really do appreciate that, and you know, happy that this could be helpful for you. But you gotta understand, like, we're grown up, we're raised as kids, and our partner. We do this also. Like, I do this to my kid as well, but I always try to have a conversation with him. Like, whenever I remember, I always try to tell him that, you know, making mistakes are good. You know, we we should be making mistakes, because when a kid walks over to a table with like a vase on it, and he's about to it's about to fall over and break that vase. It's an expensive vase. Parents are like screaming at him, and it's like catastrophic and stuff like that. But if that vase actually falls, he has now learned that it's not a good thing. It's not a good thing to do that, right? And I mean, in our upbringing and in school, we're always teach that we have to win. We have to have good grades. We have to do good. We have to win always. We have to be winners. We have to have that winning mentality. Losing is bad. We're not supposed to lose, right? But in reality, in trading, it's the other way around, because a lot of professional traders out there have a lower than 50% win rate, which means they've chosen to enter a career and a profession where they have to embrace the fact that they're going to be losers, right? So they're grown up to, like, you have to be a winner, you have to always win, you have to get the best grades, the best job, you need to make a lot of money, you have to always be a winner. And then all of a sudden they're like, let's do this thing here, which is called trading, where I have to embrace losing and I have to be literally a loser on a regular basis to make money. Now that's hard, and that's a huge psychological shift, right? And also, when you go live, after you've been on demo and you go live, you have to, because remember, you're back testing. When you're back testing, you're not looking at the P&L, right? You're not looking at the fluctuating unrealized P&L of the position. You're just back testing and getting statistics. You're looking at the overall win rate, the overall profitability, and the win rate of the results of the back testing. When back testing an individual setup inside the bigger back testing number, you don't care about the individual trades P&L, right? And you shouldn't be doing that when you're demo trading as well, right? So you shouldn't be doing that with your live trading as well, because everything that you do differently from backtesting will have a more negative effect than the results of backtesting. So if you don't care about the unrealized P&L in backtesting, you can't care about the unrealized P&L in live trading either, because if you do, you're going to have a different results than backtesting. Everything you do in live trading that's differently from backtesting will give you different results. It's very logical, right? And that's why the trading psychology aspect of all of this is so difficult. So you need to be trading like you're doing in backtesting, and your emotions does not control your backtesting, and that's why you have to make sure that your emotions does not control your live trading. So how do you do that in a good way? Well, I think ignoring P&L in terms of dollar value or whatever currency you're in, ignoring the dollar value is very, very good. You should always do that. If you're on a platform where you can actually remove the P&L, do that. If you can remove the dollar value of your P&L, remove that. So everything you should see is in percentages and risk to reward and win rate, right? You always and only care about percentages and risk to reward. Like some days I don't even know what my trading capital is. Like some days it's like it's been so long and I'm not looking at my P&L. Like it's almost like I don't even know how much money I have in my account. All I know is that I'm up 1%, or I'm up 2%, or I'm up 10%, or I'm down from 5%. That's all I know, and I don't calculate how much money that is in percentage. Of course, when it's time to get the pay and get payout and withdraw to my bank account, I have to do some calculations like, how much money do I need this month, blah, blah, stuff like that. But when I'm trading, I only care about the risk to reward of the setup and the percentages, right? I don't care about the P&L. So you have to distance yourself from the dollar value of the P&L, because the quicker we realize that it's all about numbers and percentage and statistics, the better, right? And it's all about risk to reward. So when you're looking at a trade, you're thinking, I'm gonna make, if this is a winner, I'll make $1,000, right? You're gonna be thinking like $1,000. What can I buy with $1,000? What if I have a win rate that is double? If I get $20,000, what if I have the stop loss right here so I can have $5,000. Now that would be pretty cool. I'll make $5,000 in the trade. It's way more than $1,000, right? So you know what? I'll go with $5,000. Sounds better, right? But if you think about it in terms of percentages, you're like, I'll make 2R on this trade. I'll make 2R on this trade. I'll make 3R on this trade. I'll make 5% on my capital if this trade is a winner. It will not trigger the greed in the same way. And it's all about creating that routine and the habit of distancing yourself from the P&L. Because in the beginning, even if you think in terms of risk to reward and percentages, you're always going to try to translate that risk to reward and that percentage into money, into actual USD value. But with time, you just focus on percentage and risk to reward. And with time, you will understand that, like, that idea of in your head calculating what that would be money, it kind of disappears, and you only focus on the process. You fall in love with the process, right? And it's like a game, you know. So it's like you're playing a game to catch the dips, right? It's like you're playing a game, and the rules of the game is to get the best entries. The rules of the game is to take all the entry confirmations where your edge is visible. It's not about making money. It's not about making money. It's about taking all the trades the market gives you. It's about observing and listen to the market, and the best player wins, right? And the best players are the players which are able to listen to the market, right? And then you have players which comes into this game and starts hunting for setups, starts over trading, start thinking about how much money they can make, and they get wrecked, right? It's the people that think long term, they fall in love with the process, and they know that the market is here to tell you things. The market is here to tell you when it's ready to move. The market will tell you when your edge is visible. It's not your job to find the edge. It's your job to listen, right? And if you're in that flow of the market, right? If you're in that flow of the market and you're listening to whatever the market wants to tell you, you will know when it's time to enter, right? You will know intuitively when it's time to enter. Like for me, it's very simple. Basically, it's very simple. I have a long signal. I get a long signal. I have an alert on my phone. I get it to my watch. So I have an alert. It vibrates in my watch. I pull it up. It says on this one, for example, a long signal on the FTSE 100. Check the chart. I pull up my phone. I check TradingView. I see if it's a good looking setup. If it is a good looking setup, I walk down to my office, I enter orders, and I walk away. That's it, right? Everything just goes automatically. Check my watch, check my phone. If I like it, go down to my office, put in orders, and walk away. Put alerts, and just don't think about it, right? All right, guys, that's it for today. Just one very quick note here on Bitcoin before we wrap this up. Sometimes I just get lost in these trading psychology things, but you know, when I get going, it's no one can stop me. And I do think that this is just so important that you guys you need to really care about your mental well-being, because it is what will make or break you as a trader. So two things I want to talk about on Bitcoin. We have the first level, which is the 17K level. If the 17K level gets reclaimed, I think we are going to see a move up to 18.5K. And it's at this move here, which might create the double bottom for Bitcoin, something like this, and that might confirm the reversal. And if you look at the daily, that W, the neckline of that W, might also be the previous range low. And if we reclaim this level, which is also confident with the daily 20 and soon also the daily 50 EMA, that would most likely signal to us that the Bitcoin has started recovering from the FTX fiasco, and that is what I'm hoping to see. All right, guys, thanks for watching, and I hope to see you in the next live stream. Take care.